Okay, good day guys. You're welcome to the NextGen-Traders, brought to you by Atlantis Accord. In this, the voice of your host, Poseidon the First. So, you're welcome to the great and powerful markets, the place where the most liquidity flows and the place of opportunities, right? So, before we start delving into any complicated stuff, I would want to run you guys through the basic and most common stuff you go through or you probably be coming across 98 to 100% of the time as a trader, be you a forex trader, a crypto trader, a synthetic trader, or a fundamental analyst, right? You'll be coming across these things, right? You'll be coming across these things 98 to 100% of the times. So it is best that I give you guys a solid foundation, a proper understanding of what these things means, right? Of what they probably mean. So you'll be able to kind of like grasp and understand them to your own personal kind of like to have your own personal understanding of what they are. You get. Without further ado, let's head over to what we have today, which is welcome to the broad market, right? Now, how do you know that the forex market has been in place for over 200 to 300 years, right? It has been in place for over 200 to 300 years, and people have been making money from those markets, even without us having to do anything, right? Without us having to do anything. So, don't rush, don't fret, don't feel like it's the end of the world. Just know that it's a market of opportunities, right? It's a market of opportunities. So first off, we'll be heading over, we'll be explaining everything here one by one. Explaining everything here one by one. So the first thing we have in our itinerary here is the forex market. And what is the forex market? Please have your notes. I won't be kind of like giving you personal explanations, right? Or kind of like writing it down. I'll just explain it and you can jot it down from my explanations or my definitions, right? So the first thing we have here is the forex market. Now, what is the forex market? Forex market is basically abbreviated as foreign exchange, right? Foreign exchange. That is FOREX. For FOR foreign EX exchange, right? So it's a foreign exchange market where you exchange foreign currencies. You understand where you exchange foreign currencies. So it's a broad market that brings opportunities and intellectual understanding to both technical analysts and fundamental analysts. Okay. So in the forex market, you deal with things like currency pairs, deal with things like pips and spread. Okay, so next we'll be heading over to currency pairs. Now, what are currency pairs? Currency pairs are basically currency pairs are basically an a foreign currency, right? A foreign currency coming together to kind of like give you a trading platform, right? To give you a trading possibility for you to be able to exchange a particular currency against the other currencies. Okay, so you have currency pairs like GBP, JPY, Japanese yen. You have currency pairs like EUR, USD. Okay, I think I have to tag these ones out. So you have currency pairs like GBP, JPY, standing for Japanese yen, right? We, GBP is okay. Let's kind of like give it one by one. So we have GBP, we have JPY, we have CHF, we have NZD, we have EUR, we have all what have you. There's a lot of them. Okay, there's a lot of them. We have EUR, right? Have I said that before? Okay. RG, right? Sorry, EGR. I think. What am I even saying? Yeah, we have yeah, I've said I think let's just kind of like explain this. We have GBP, that is Great Britain pound. We have JPY, that's Japanese yen. We have CHF, that's Swiss franc. We have NZD, that's New Zealand dollar. We have EUR, that's euro, like normal euro. And then we have AUD, that's Australian dollar. Yeah, so there's a lot of them. There's a lot of them which you actually come across of. But let's just keep heading over. So when they become a pair is when they kind of like trade with other currencies. So you have something like GBP, JPY coming together to form a cryptocurrency pair. We have something like NZD, JPY coming together to form a pair. We have AUD, CHF coming together to form a pair. We have NZD, USD coming together to form a pair. We have Euro USD coming together to form a pair. We have AUD USD coming together to form a pair. So this basically means both um the Great Britain pound and the Japanese yen are coming together to form one currency pair. So you have to trade one against the other, right? To make profit, you have to trade one against the other. Remember that the forex market is all about buying and selling. So you have to buy one to sell the other. You get. So there's what we call safe. There's okay. There's what we call safe haven in trading, right? There's what they call safe haven currencies that are safe haven, and then they have base, and then they have quote. Okay, the base the base is basically the one that kind of like rules, right? The base is like, let's say in this particular scenario, we have GBP JPY. The GBP is basically the base, and the JPY is basically the quote. So if the market is in favor of the GBP, this currency pair is definitely going to buy. But if the market is in favor of the JPY, and the JPY is the quote in this process, right? We have GBP JPY, right? We are looking at GBP JPY. So if the market is in favor of the GBP JPY, right? If it's in favor of the Japanese yen, this market is going to sell. You get, this market is going to sell because this Japanese yen now kind of like pull this guy. So then heading over, we have long and short. Long is basically buying, short is basically selling. So in the market, you have to buy something to sell something. Okay, you have to buy something to sell something. Okay. Now we have pips. Now what are pips? Pips are basically unit of measurement, right? Used to express value between two currencies. Okay, they are used to express value between two currencies. Okay, so let's say for example you have GBP JPY, and then the price of GBP. Let's say the price of GBP here. Let's have it as GBP is at 1.0 something or 867, right? And then the price of the JPY is at 1.087 or whatever, okay? You get. So now the pips is basically the rise in value against this currency against this currency, okay? This currency against this currency. So a pip is basically a value against this currency. So it's kind of like how much you make while trading this guy against this guy, okay? It's basically what you make while trading this guy against this guy. Now, pips are different from spread. Spread is what these firms or brokers make while you trade this guy against this guy, okay? They're kind of like what is needed for a trade to get triggered, okay? For a trade to get triggered, okay? So we'll probably get back to all this stuff just to hurry up things. Now we get into the crypto market. The crypto market is basically dealing with cryptocurrencies, right? Cryptocurrencies are virtual currencies that you can't see, virtual cash that you can't see or have access to. Not that you can see these guys, but this is practical definition of cryptocurrencies, right? So basically assets that you can't see or touch, okay? So in cryptocurrency, when you come to the crypto market, you deal with things like spot, futures, and leverage, right? So you have spot. Spot is basically buying and selling or buying and selling of cryptocurrencies at a specific price without added leverages or borrowed funds, right? So then we have futures. Futures is basically buying and selling at a specific price or using a specific exchange to purchase cryptocurrencies as to make profit from the market, right? So we have leverage. Leverage is basically borrowed money. Just call it basically borrowed money. It's just like you want to place a trade. For example, you want to place a trade of, how do I put it? Okay, let's say you want to buy Bitcoin USDT, right? And then um you're buying Bitcoin USDT at 550k, right? When Bitcoin USDT is at 50k, and then your take profit is probably somewhere like let's say your take profit is at 70k, right? Your take profit is at 70k. Now, normally, if you buy normally from 50k to 70k, you buy normally from 50k to 70k, you are supposed to make 20k profit. Let's just put it like that. You're supposed to make 20k profit. But using leverage, you can be able to kind of like increase your profit. You get. Now, let's say you use a 50x leverage, you're going to increase your profit times two. Meaning instead of you to be making 20k, you can be making 40k You can be making 40k, meaning the leverage kind of like they borrow you the money from the firm you're using, sorry, not the firm, the exchange you're using, okay? You get the money from the exchange you're using. So that's leverage for you. So you get over to synthetics. Now lot size are kind of basically limited size, right? Basically limited size. So lot size are kind of like standard. They're just like standard measurements that has been left in the market. Okay, so they're used to describe volume or size of a particular trade in the forex market. Okay, so it kind of like represents 100,000 units here. I think 100,000 units of the base currency in a currency pair. Okay, so lot size is representing 1,000 units of each base currency, right? So this is the base, as I told you guys, and this is the quote. So the currency is probably representing 1,000 units of this against this guy. Okay, so you have stop loss. Stop loss is a point you're expecting the market to take you out so as not to incur more losses, right? So as not to incur more losses. So you're trying to stop your loss from getting more than what you've already lost. Okay, let's say just as you said, Bitcoin, your take profit is at 70,000. You want it when it get to 70,000, they should give you your money. But you also tell the exchange that if it start going down below 50,000 and it start going to 49,000, 48,000, 45,000, please take my money out and cut my losses. That's what stop loss is. Now we have take profit. Take profit is basically the point you expect to take your profit from, just as the name sounds, okay? So we have fundamental analysis. Fundamental analysis serve as fuel to the market, right? They basically enhance or propel price further, or kind of like they help enhance price. You get, so everything about the market is being enhanced by the news. Everybody knows that the market is being enhanced by news. Okay, so fundamental analysis is the use of news to make money from the market. Okay, so meaning that you're kind of like, sorry about that, you're kind of like anticipating that if the news is going to come out positive, it's definitely going to have an impact in the market. Okay, it's definitely going to have an impact in the market. So meaning that if you have for example, you're intending to buy a particular currency pair, intending to buy NZD-JPY, and NZD-JPY has a news by, let's say, by 5 o'clock, right? You're intending to buy NZD-JPY, and NZD-JPY has a news by 5 o'clock, and then maybe that news automatically comes out to be, and that news comes out to be kind of like positive, right? You should know, okay, if the news is for NZD, that means is going the currency, both all NZD pairs are going to kind of like buy, you get. But if the news is against NZD, the pairs are going to dump. So you kind of like make use of the news and you capitalize on the news to make money. So just to say, I wrote news and I told you example of news. We have FOMC, right? FOMC news. Now entry and exit is basically the same thing as stop loss, yeah, stop loss and take profits. Rather, it's basically something as take profit, right? Exit is basically something as take profit. Okay, entry is the point you intend to get into the market, right? Is the point you intend to get into the market. So I think that's about it. That's about it. So you guys should just kind of like pay close attention to this stuff. Okay, pay close attention to this stuff. So remember again, just like I told you guys about leverage, as much as it kind of like increases your profit, also it can also kill you. Literally, like it can kill you. It's also a double-edged sword, meaning the kind of profit it can give to you. If it's also going to take your stop loss, it's going to take times two of your stop loss. Okay, it's going to take times two of your stop loss. More light on pips. Let me show more light on pips. So pip is basically kind of like how do I put it? Is the difference? I think there's no definition gave us the difference between bid and ask spread of a foreign currency, right? But I'm trying to kind of like simplify it. So I'm telling you guys, is basically the money that is being made with, for you trading a pair against another pair. Okay, so PIP equals to 1/100% of 1% of a currency, or you can call it 0.001%. Okay, so that's just about it. Okay, that's about it, guys. So thank you guys for your time, and I'll see you guys on the next video. I'll see you guys on the next video. So this is basically what you'll be making use of. Like, please, Pia, just kind of like replay this video whenever you get the chance again. Okay, do your own researches and find out more about these stuffs because you'll be making